Hey guys, this is Market Update. We're exactly where we should be in the Bitcoin cycle right now, which I want to look at in this video. This Glassnode data showing us some very interesting points if you're looking to dollar cost average or buy BTC and crypto right now. CPI coming out tomorrow as well, the latest inflation figures. We'll have a look at some of the data around that and how it could affect the price of Bitcoin. I'll leave timestamps for all of that below. I want to look at Bitcoin and Ethereum prices initially though, because both of these assets are in huge uptrends. It's very, very clear at this point, and they're both coming into this resistance zone. Both prices are coming into something where when we break out of that, that really is, for me, that real bull market. When that's going to come, is it really that important? Doubt it's going to come imminently in the next 6 or 12 months. You would be expecting something to happen, some piece of news or an ETF application being accepted, or the reversal of the economic cycle that we're actually witnessing right now. BTC is just consolidating right here at resistance. This price action for me is very positive. And yes, if an ETF application gets rejected or pushed back, the ARK Invest application in the middle of August is the next decision date. Maybe the SEC delay that a bit further and some of the kind of heat comes out of the market. That could definitely be a potential there. But any pullbacks or anything like that, I think, is to be bought in this market environment because the cycle has changed, in my opinion. We're seeing that in price now. So we're seeing a huge buying pressure into Bitcoin and a consolidation at resistance. This resistance is extremely big. It's major resistance. You can see that over the market cycles, major resistance here at 30K. So 30, 31, 32K is going to be extremely difficult to break through. It does need a narrative shift, in my opinion, which is an ETF being accepted, or it needs something to be happening in world markets with massive financial intervention. The first one is more positive. The second one is probably very negative short term and ultimately positive for BTC. So that's always a risk. And in bull markets, you do get big drawdowns as well of 20, 30%, but that's the game we're in with BTC. You can't get the upside without that risk of those drawdowns as well. They always happen, but right here is very positive price action for BTC. For Ethereum as well, really keeping up with Bitcoin, we can see a huge resistance zone around 2,100, something like that. It's a big zone, but you can see we have tested this zone a couple of times and obviously been rejected away from it. The first kind of recovery here, that was a dead cat bounce and it got sold off. We went into another resistance zone here and you can just see the price is just getting bought up. There are buyers in this market. So I am very positive on both the price of BTC and ETH. This shows price strength, which is very different to what we've been seeing in the bear market. So, just maybe grinding into this resistance once more. But as we can see within the next, let's say 6 months, we're meeting both resistance for ETH and also for BTC. And so what is going to happen? Where is the breakthrough going to occur, or are we going to get rejected again? I believe if we get rejected again, great buying opportunity because of where we are in the economic cycles. If you're a trader, deposit bonus on Bybit, check the link in the description. You can get up to 30K if you make a deposit and trade on there. So check that link for the details. Tomorrow we get the latest inflation figures out of the States, or at least the CPI, consumer price inflation. This is a headline figure, so it is important, but the Fed really aren't looking at this. They keep reminding us CPI is not something that's going to make them change what they're doing. They may even raise rates further. What they actually want to do is destroy the employment rate. That's actually what they're trying to do, and they won't stop until that happens. So that's actually the real figure we want to look out for. Looking through to CPI and the PPIs as well, which is producer prices, we're seeing a huge deflationary wave go out throughout the world. It's happening in Europe, and it's definitely happening in China. You can actually see that producer prices are negative here, showing that we are around the bottom of a cycle. And once you do get a bottom, you get the intervention, and then the supporting of the economy to then rise back up. So we are towards the bottom of that kind of inflationary cycle. Now, for the rest of the world, China usually leads. And so we should be looking at CPIs and PPIs coming way down. That's actually really not great news for the economy, of course, but it not necessarily means that we're going to get a drop in markets because the US is running a fiscal deficit. All this means is that when growth slows, the fiscal deficit actually grows even faster. A fiscal deficit means you're spending money that you don't have. So how do you spend money that you don't have? You have to either create more debt, and eventually that debt, because there's no buyers for it, gets bought by the central bank, and that debases the currency, which means asset prices go up. the dollar is worth less against scarce assets like BTC. So a lot of people calling for a new bottom maybe aren't realizing that the worse the economy is, the more currency debasement has to happen, which means that asset prices actually go up, or at least within those cycles. So let's have a look at CPI tomorrow. Forecast is 3.1. So it's coming down a lot, but CPI is largely irrelevant for the Fed. 3.1 is still above the target. If we look at core PCE, which is actually what the Fed looks at, this is still around 4.6%. Forecast to be around 4.4%. It comes out towards the end of this month. Core PCE is something that the Fed looks at more, still double their target, although it's really the direction of travel. And you can see core PCE is coming down. This is still way too high. How do you affect this? You make people unemployed, and that's really what the Fed is going to wait for. They're going to keep rates high until unemployment starts to rise. And as you can see here, this is a great figure. It looks like we're right on track with unemployment or employment versus every other cycle. Employment is still following the 7 recession average dated from the time of the first yield curve inversion. Peak would come in November. So maybe you're looking at Q3, Q4 for unemployment to really start getting higher. Unemployment going higher, that's when the Fed are going to flip and actually have the cover to do that. But until then, inflation could be coming down. The Fed aren't going to do anything. Usually around 6 months before a pause, and then when they start cutting again. And so we're just not there yet, but maybe look towards the end of the year for that. But like I said, it doesn't mean that we're just going to get more weakness for BTC and ETH. It looks like these are starting their uptrends, pricing in all of this flip and the cycle changing to central banks supporting the economy maybe sometime next year. Glassnode believe we're in an accumulation phase for BTC right now. I agree with this from a time basis and a price basis. We are now, 9 months away from the halving, so you'd be in an accumulation phase before that. Bull markets tend to peak after the halving at some point, so that would work out on a time basis. And we can see supply and profit and loss here. In red, the peaks, that's the bottom of each bear market where you get the biggest drawdown, which are obviously the best times to buy. But you can see the recovery here after that peak. So you have the peak in loss, recovery, peak in loss, recovery. You saw a huge amount in loss here, but the recovery has been very strong. So for right now, if you're trading short term, of course, with a little bit of FUD, maybe the ARK Invest ETF gets pushed back or something, maybe some FUD, trickles into the market, and that's when you get these bull market drawdowns. So you actually get a 20% drawdown in a bull market. People get puffed out of their BTC, maybe sell it for a small loss or something like that. They're actually the times to buy given the larger cycle. So as you can see, when you have a lot of supply and profit, it's very easy for those profit takers, especially with a little bit of FUD, to actually start taking profits and give us those bull market drawdowns, which are, for me, if you want to play a little bit of a longer game, a much better time to get some and actually buy those dips. So buy FUD during bull markets or accumulations. That's worked out in every previous cycle. If we assume Bitcoin is still growing in price and size as a network, which it is, you can see the data there. What we can see here as well is 30K, a huge supply cluster at 30K. So this 30K level is going to be very, very difficult to break out from, in my opinion. We are going to have positive news on the ETF or some sort of very positive macro news that changes things in some way, or extremely negative macro with a bank blow up or something like that, which just leads to even more money printing essentially. So that would be negative short term, but essentially positive. But there has to be something that clicks to break us through the 30K, in my opinion. And that may not come for another 9 months in terms of the ETFs. So it could be, just dragging that out, that process out. As we can see here as well, you can see the primary bear and recovery performance. So again, it looks like, just like every other cycle, you have a primary bear market with those big drawdowns, and the market rallies here, you get the recovery. So the primary bear and a recovery for each cycle. We had, a very long bear market this time with a very large drawdown and then a very large recovery as well. So short term, the recovery has been very, very good, which can lead to some profit taking from short-term traders if you get a little bit of FUD. However, like I said, I think that during these accumulation zone and bull market zones, any drawdowns, 20% plus, are to be bought because you're in a larger bear market. You can also see here that we're just coming out of the bear market in terms of supply and profit as well. 50% of the time, the price has been higher than this. 50% of the time, the price or the price history has a lower supply and profit. So we are right at this level where, a little bit of FUD could definitely drop us off. I would be buying dips here. And to break through much higher would require much better news because, a lot of people are in profit, which means that they may be taking their profits. And so this 30K level just seems to be an equilibrium right now. Dips are to be bought, in my opinion. And to break through, we do need much better news specifically for the industry, for example, an ETF approval or something else. Both Bitcoin and Etho are showing real strength. You can see the buyers flying back into the market for both of these assets. This is Ethereum now, the uptrend coming into this resistance. Yes, resistance is difficult to break through. You may test it a few times and get rejected from there, but I think that's missing the point. You can see this uptrend for BTC as well, just hanging out at resistance level. And I understand that we're going to get some volatility here, but as the economy slows and weakens a little bit, ironically, asset prices, especially Bitcoin as it's so macro, may tend to do well because the worse the GDP is, slower the economy is, ironically, the fiscal deficits grow. And as fiscal deficits grow, you need ever more debt creation to fund those deficits. And what that means is the currency gets debased over time. At some point in the future, they're going to have to try it with more QE or some sort of buying of their own debt because the debt is just so big. So ironically, as the economy weakens, these can actually strengthen because the denominator is getting debased. Dollar's getting weaker continually. And for as long as that happens, you'll see strength in these assets. And so, yes, it's going to be volatile as all bull markets are, or accumulation zones, especially with a little bit of bad news. But that's overthinking it a little bit. What other assets are you going to be in right now as economies weaken, which we know that's all part of the cycle where you just go through more weakening of currency and more debt creation. So what other assets can you be in? We're seeing the market flip into the accumulation zone, and you've got the halving next year with potential ETFs. So that's the narrative, and we may get some volatility to the downside if we get some really bad economic data, which is always a risk, but it's to be bought, in my opinion. If you are a trader, check out the Bybit deposit miners up to 30K, make a deposit and trade. Check the link below for the details there and make your deposit. Come and trade with me on there. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.